Good morning, everybody. Welcome to the Crypto Morning News. I'm your host, Taylor, and let's go ahead and get into it here. Bulls set to answer after a big red day yesterday. Man, it was a red and discouraging day yesterday for sure for a lot of folks. Uh, Bitcoin fear and greed actually ticked lower today than it was yesterday into extreme fear. Staying in extreme fear, I should say. 25 basis point cut in December is 90% likely, according to Polymarket. We can get a live read on that now. 91%. Okay, so moving in a more positive direction. That could be potentially anticipating Fed Bowman's speech at 11 p.m. Eastern Standard Time. Moving into our major focuses of the day, we had two very hard-hitting, bullish headlines that were released when the darkness was at its most menacing. Right, the dark always becomes before the dawn, and as things get really rough, and then there's capitulation, then there seems to be bullish headlines that magically get dropped during that time. Here's what they were. Vanguard officially lists BlackRock's spot Bitcoin ETF with trading set to go live today. Now, they also listed many other ETFs as well, from what I understand. But of course, until we see what they actually post, it's all just kind of conjecture. So we'll see what they actually make available to their clients. But this one is the one that is confirmed. This is a really big deal. This might not seem like a big deal to you if you don't care about, Wall Street and stuff like that. Vanguard has kind of been seen as the half of Wall Street leadership of the half of Wall Street that does not believe in crypto, that thinks that crypto is dumb, right? And so for Vanguard to be pivoting from what they have said in the past, which is that they will never make this ETF available to their clients, in I think it's less than 2 years, they pivoted from that and have done it. They have done what they said they would never do in less than 2 years. This is a really big deal, especially symbolically for Wall Street. Now, could just let's get to the next headline, and I'll give them the caveat here. Bank of America says its wealth management clients may allocate up to 4% of their portfolios to crypto. And then the other main focus is the Bank of Japan rate. We'll get to that in a second. Good morning, Bedridden. Good morning, Yori. Hope you guys are doing well. So the caveat here is, okay, so Taylor, does this mean the bottom's in for crypto? Does this mean we're only going to go higher now that Wall Street is fully on board with cryptocurrency? I don't think it's that simple, but this could be what the market was waiting for in a big way. I would say, though, that we also have the Clarity Act, right? That's coming. We don't know exactly what the timeline is. It's probably almost definitely going to be after 2025 is over. It's going to be in the new year, right? So the market's definitely waiting on that. It's a big one. But, this is a big bullish headline. Now it seems like the whole of Wall Street, there's not really a single entity in Wall Street that represents anti-crypto, right? There's some big insurance companies, maybe you can make that argument, but Wall Street itself, the trading apparatus of the global markets, is now mostly pro-crypto, if not totally pro-crypto. So that's a big symbolic move. I don't think that this is going to open the floodgates in some way that folks weren't thinking today. I think that the floodgates are open for the 401ks for the most part. There's a couple of stipulations to that, but we'll move on. Spend a lot of time on this. It's very bullish. Doesn't mean that we can't go lower here. I will say, though, that my feeling about this is that the worst probably of this move is behind us to the downside. That's my feeling, though. That's my instinct. That doesn't mean that that's what the truth is. That's not what the future is going to show us. All right. Bank of Japan rate, 25 basis point hike in December, 82% likely. That is likely now. So they're going to hike. That was not what was being baked in for the entirety of the spread. So that is something that is new for the market to try to digest, and that's a lot of what we saw yesterday. Now, I've been reading this morning. I've been taking some time to really immerse myself in this, and there's some very talented analysts who have basically come to the conclusion that this time is different for the yen carry trade. And the yen, essentially what they're saying is that the Japanese economy is in such a bad way. It's in stagflation, essentially. And that the money that would have usually gone back and paid back the loans, like hedge funds are taking out loans from the Bank of Japan, the money that would have gone back and just stayed in yen products and like the Japanese stock market and bond market may actually not repatriate or only repatriate temporarily, meaning it would actually make its way back to the NASDAQ and to crypto and to maybe Chinese stock markets and different things like that. So there's a bit of an argument to be made and we may be seeing it today, just depending on how much the NASDAQ and the S&P rallies throughout the day, that could kind of tell the market, hey, we're not so afraid of the yen carry trade anymore. Yes, it makes less free money, but the money isn't just going to go stay in the Japanese economy, and therefore there doesn't need to be an unwind. They're just going to stay in what they're invested in with that free money. But the hedge, the currency hedge, is the part that's going to get modified. But that shouldn't be as big of an impact as we've seen in the past. Okay, all of that to say, the Bank of Japan looks like they're going to hike rates, and that is going to reduce the amount of free money that's kind of circulating around in the global economy. But there's some reason to believe that this time it's not going to be as bad for risk assets. SEC Chair Paul Atkins says innovation exemption for crypto firms is coming in January. This one's pretty bullish, right? This one, there's been a lot of anticipation for this. It's going to be really interesting to see how this actually plays out in practice. This could be a moment where we see a lot of those big corporation chains come forward and really kind of flex what they've been working on behind the scenes. But I think that this is going to be very beneficial for Ethereum and for DEXs as well on major chains like Ethereum and Solana and a few others. So I don't want to take too much time to try to get into the details of this essentially, but there's a designation called a broker dealer, and essentially what this is going to be as an exemption is that you don't have to be a broker dealer. If you want to be a decentralized application, a dApp, or you want to be a blockchain, if you're adequately decentralized, you can be considered a non-broker dealer, but do a lot of brokering and a lot of dealing, okay, of non-securities, right, but of assets. Now, when it comes into tokenized assets, well, is it tokenizing a security? That's going to be more opaque, but I think that's kind of where Paul Atkinson's going with this is that, hey, Wall Street, they have to be designated as a broker dealer if they want to broker and if they want to deal securities. But that standard and that classification may not carry over to cryptocurrency and the way that dApps and blockchains can operate in a similar way to broker dealers. If you understand what I'm saying here, you realize that that's a pretty big deal. But again, what actually happens in practice is going to be very important to watch. In theory, this is big, but in practice, there could be some things that just don't play out the way that a bull would think they would. Ripple to expand XRP and RLUSD payments in Singapore after securing major payment institutional license. That's just good old-fashioned bullish news, bullish vibes there for Ripple XRP. Moving along, Cantor Fitzgerald has disclosed a 1.2 million stake in Solana ETF SOLZ ticker in latest F13 filings. So not a very big number, 1.2 million, but that's directionally significant for Solana. Next one here, you could easily camp out and talk about this one for a long time because it involves a little bit of politics, but I'll try to give a little bit of my perspective on it without getting too into the weeds. Michael and Susan Dell to donate $6.25 billion, a much bigger number, to fund Trump accounts for 25 million U.S. kids. Okay, so I don't think these accounts, A, are going to be formally called Trump accounts, but maybe in the way that the Affordable Care Act was called Obamacare, these accounts will be called Trump accounts. That'll be an interesting little meme that'll be with us for some time if these accounts stick. So this is interesting because the question, of course, is are these accounts that every kid apparently is going to get, like kind of an IRA at birth. If you're an American citizen, is kind of what is being pitched here. I don't know if that's how it's going to play out, but you're born, you're American citizen, you get an IRA, and you get a funded IRA, and meaning there's some bundle of assets in that IRA. The question obviously there is Bitcoin going to be in that cluster, in that basket of assets? We'll see. But that's the speculation. That's the conjecture. And so when Michael and Susan Dell are obviously making kind of a political campaigny, scratch my back, scratch yours type of move here with this donation, what it does is it escalates these accounts to the point where it's like, oh, okay, the rich are taking this very seriously. They're seeing these accounts as a leverage point to be able to influence, to gain favor with leadership. And so in that way, we can kind of assume that this kind of a headline signals that these accounts are actually going to go through and they're not going to be insignificant. And so that begs the question, as a crypto investor, will there be Solana, right? Will there be Bitcoin? Will there be some crypto in there? Moving ahead, looking ahead, December 4th, jobless claims, expectation 220K, previous 216K. December 5th, PCE prints at 11 EST. Expectation is 2.8. The previous was 2.7. So December 10th, FOMC decision. Asia closed mixed, and this was key. This is actually pretty important. The Nike closed even. It didn't move up or down. Just the day after the yen carry trade fears were starting to surface and really become significant in global markets. So think about that. That's actually pretty bullish, right? That there's the opposite of volatility in the Japanese stock market on that day. Now, there could be the case that they did a pause on the markets. It could be the case that they did a circuit breaker type of deal. I haven't seen those headlines, though. Overall, this is just somewhat good, right? That there's a removal of volatility in the Japanese markets during this time, where fundamentally they just got thrown a huge curveball with the Bank of Japan signaling that they're going to hike rates. All right, let's take a look here at the charts. We're actually quite a bit ahead of time, so I might end this one early. If you take a look here at Bitcoin's price action, I'm on the daily chart. The price action looks very good. Now, I must admit, I fairly arbitrarily drew this box. What I did to achieve this box, since we're a little ahead of time, I'll show you guys this. This box literally just came from the peak to trough measurements from the last two drawdowns of this bull run, right? So you had this one that was 32%, right? So I went here and I did this drawdown, 32%, right? And so you can see this is just not even accurate. So, but 32% was that drawdown. And then this drawdown, I believe, was steeper. Yeah, 33.4. So when I went and drew this box, it was extremely arbitrary. It's kind of crazy how much the price action has bottomed right on the bottom and then found support right on the top. Okay, enough of me bragging about something that's pretty meaningless. Now, what's interesting here is that we closed the daily candle well above this box, right? More importantly, we closed it above this uptrending line of support. And I believe there's an important moving average. I think the 100-day moving average was right around this area as well. Must have been on the weekly. So the 100 weekly moving average was right around this level. We wicked below it, but we did not close below it. So that is good. That is going to reassure bulls about this bottom potential, right? And that is kind of the question, right? Is this the bottom for Bitcoin? Is this kind of the zone? Is this the time period where crypto and Bitcoin bottom and we see a V-shaped recovery like we saw here? Or do we see a more prolonged kind of delayed sideways action before the next leg up? Obviously, we've regressed in this one. So I think it looks in this consolidation here, we've regressed. So I think it looks more like this one, which means we would probably get more of a V-shaped recovery, right? But as you'll notice, there was delay down in these, I'm on the weekly chart, there was delays in these weekly candles before we shot back up. But there are some differences this time. Obviously, price action is now south of the, oh man, this is the 200-day moving average. This would be the weekly, though. The 200 weekly moving average. 50 weekly moving average. So we're south of that now. The question is do we go back and we, go down here to touch that 200-day? My guess is probably not. I think there's too much. I mean, we're already seeing a ton of buy wall here, a bunch of demand at these levels, because after all, you have big governments, you have big buyers, big bulls watching the price of Bitcoin all through here, but they're talking to their advisors, they're talking to, quants that they have, whether they're at their family office or whether they're Mohammed bin Salman of Saudi Arabia. They have these guys who are trained on Wall Street. They worked for Morgan Stanley, they worked for Goldman, whatever it is, right? They're sitting there and they're talking to their advisors, and their advisors are telling them, don't buy the all-time highs. Wait, right? Wait, it'll come back down. Well, now the question is like, how much longer do they wait? How much longer is it until they go ahead and pull the trigger? And I will say, when you get headlines like this, Vanguard officially lists BlackRock Bitcoin ETF, that is kind of telling a lot of the story that this might be the point where bulls start to heavily outweigh bears, and the selling really gives way to the buying. So we'll see. I mean, that's a hopeful refrain that I'm kind of echoing here in the market, but this is generally kind of what the market is thinking here. So I'm thinking this. My gut feeling is telling me that this is a significant bottoming pattern, and that we are likely to go back and test higher. Now, do we go back to all-time highs? Probably not immediately. I think that at least on the weekly, you have a big resistance point is going to be getting back above that 50-day moving average, 50 weekly moving average. Okay, and then on the daily, there's of course going to be all kinds of resistance too. So so you have to kind of make that's where it's thrown back to you on your side. Like, what do you do? What's best for your case? What's best for your situation? But the way that I'm reading the news and the way that I'm looking at the charts is that we've had some reasons to be bearish, right? But we've also just seen overextension. We've seen higher highs and higher lows, which are characteristic of a bull market. But we've also seen, at least on the weekly, right, we got two overextended periods of weekly MACD lines pushing very high and then crossing and telling us, hey, momentum is slowing. The rich people, the people with all the money, are not picking up new positions here. The hedge funds, sure, yeah, they're always going to be there creating decent sized volumes to push prices higher, but they're playing a different game than family offices and buy only funds, right? They're playing a different game. And definitely the digital asset treasury companies stopped buying a lot of digital asset digital assets, or they slowed their pace, right? And why is that? Well, it's because these assets were getting overvalued for where they were in time, and some of the bearish catalysts that were likely to come ahead, which, tax loss harvesting at the end of the year, the yen trade kind of having some uncertainty. That was something that these more sophisticated houses and financial firms, they can pick up on that stuff a lot earlier. And so they're going to say to themselves, well, why are we going to buy this asset at all-time highs? Let's wait for a drawback. So now the question is are they looking at this MACD coming down below the zero line and saying to themselves, man, maybe this is a time to go ahead and pick up? Or do they say, if this is going to be a replay of 2020, the 2020 bull market that had a big movement to the downside, but then resumed higher, the MACD it did have a dip below the zero line during that period, but then it curled and came back up. So what I'll say is that the bearish histograms here, the bear momentum histograms, have already exceeded that period, and we haven't seen the curling yet, right? So if I'm on the sidelines with big money and I'm looking to get a big position in Bitcoin kind of all at once, or maybe have a period where I'm going to dollar cost average in. Again, when I say big money, I'm talking about north of 500 million, right? People that are thinking about putting that much in. This is still not where I want to buy in quite yet from a momentum standpoint, right? From a price standpoint, this might be the best that I get. It just needs to trend sideways for a while or slightly up and let this momentum indicator kind of cure, kind of heal, and then there'll be a lot more buying around the resumption of the momentum to the back to the bulls. Okay. All right. There's a lot to be said there. Hopefully, I didn't confuse people with my technical analysis. Again, usually in our group, I don't do a whole lot of technical analysis. And by the way, this was very surface level stuff, kind of just telling the story on the zoomed out daily and weekly charts. All right. We've got a lot of comments here, some that I definitely want to get into here. Bedridden said, T-Shroom, Pepe loan yen for 0%. People loan yen for 0%, but not anymore. And they invest that lended money into stocks and bonds at 3 for 5, yes, interest. But since the hike is coming and hike goes to 3.5, that's where the stuff gets lit. Correct. Yeah, you're describing accurately the unfavorable environment that's created from the Bank of Japan hiking rates. And I've said this a lot of times, but since this is a public show, there's probably a lot of new people that don't know. What is the yen carry trade? Why is that so important? Well, the Bank of Japan has some of the lowest interest rates in the world, right? And so hedge funds and sophisticated investors, they go to the Bank of Japan and say, hey, we will take a loan from you. Loan us some money at those crazy low rates, and we will take that money and we'll go buy treasuries and earn a free 4% off that, right? Right. If I'm taking out a loan at 1%, and then I can immediately get that, not immediately, but I can get 4% back on that from US treasuries or from British bonds or from German boons. It's just free money. And so with that free money, right, they go in and take more risk. And that's where they go and take risk on like the AI play through Microsoft or OpenAI in the private markets or whatever they're going to do with that money. Some of it does go into Bitcoin. So, yeah, that's the yen carry trade. And when the Bank of Japan hikes the rate from, let's say, 1 to 3%, right, they're not going to go that quickly, but you can see that, okay, now I have to borrow at 3%. I can still get 4% over here. That's still worth it, but I'm getting a lot less free money to go play with in the risk markets. Hopefully that makes sense. Warrior said, I think it'll be pretty heavy growth weighted, so maybe some crypto exposure, but honestly, I'm just glad to see someone thinking past the 4-year term to actually help the next generation. Yeah, I think, okay, so you're talking about the Trump accounts. I think the Trump accounts are very interesting. I don't like to see the role of government expand, right? That's kind of like my base theory, is that the government should do less, not more, in my everyday life and in the life of incoming citizens via birth. But I think that expanding market liquidity, that's what this is, it's the government saying, hey, we've got a bunch of money. Some of this money we're now going to give to the citizenry, and that's going to be invested in the stock market, probably, in a basket of other goods. That's an expansion of liquidity into markets that I'm invested in, U.S. equities, right? So I can't argue with it on that standpoint, but fundamentally, I don't want the government doing more. I want the government doing less, but we'll see. I think that the lines between government and the private world, unfortunately, are going to continue to be blurred because of what AI can do, and that's going to be a whole nother story. Let's see what else we got here. Warrior, thanks for your comments, Warrior. Thanks for your comments, Bedridden, as well. Your English is great. Kenny G said, let's manifest this rally. Santa slash Christmas, Jesus's birthday rally. Yes, let's manifest it. Yeah, I think it's possible. Bedridden said, and we are talking about banks that have loaned yen, and it's billions. Imagine selling billions on pressure. Yeah, it's crazy. The Stanton 90 said, "Is it just PTSD, or is this a bull trap, in your opinion?" I see what you're saying. We don't know, right? We're gonna have to find out. I guess my opinion is that this is the this is the bottom, right? That's my feeling, right? However, I felt that before, as the prices were coming down. I'm someone who is saying I would be surprised if we got south of 100,000. I am kind of surprised about that, but more because 100,000 was a strong psychological number. So I'm kind of I'm an optimist, and I have to counterbalance that optimism with reality. And the reality is simply this could easily not be the bottom, right? However, we're getting the rate cut in in December. A lot of the reason why we had such a sell off on the surface, the news level, was because the Fed wasn't going to cut rates. Again, not the Bank of Japan, the US Fed wasn't going to cut rates. Well, now it's 91% likely they will, right? And when we get onto the other side of Fed Bowman's speech, around noon or 1 or 2 p.m. today, and the markets have time to price in the comments from Fed Bowman, if we're still north of 85% likelihood that we're going to get a cut, we're getting a cut, right? So does that guarantee that the bottom's in? No. But according to what I was reading this morning, the analysts that were talking about how the yen carry trade is different this time because the Japanese risk markets are not as attractive because they're basically in stagflation. That tells me that at least for the equity side, U.S. equity side, there's probably going to continue to be a flow of capital from that yen carry trade, and there's not going to be as much of an unwind as there was in the past, because it's not as attractive to dump your liquidity into the Japanese stock markets and just leave it there, rather than repatriating it back to the U.S. through selling in and buying dollars. So you might say, okay, well, it sounds like everything's going to be okay. Everything is not going to be okay. The yen is going to suffer greatly from this. What the Japanese bank is doing is sacrificing the currency, the yen, for the Japanese bond market, right? And to some extent, that is the right thing to do. But there is a loser in this, and it's the Japanese people who hold yen, who are saving in yen, who have to go out and buy bananas and milk and bread for their families with that currency. It's losing its purchasing power. So there is a loser. It's not global stock markets this time. Okay. Almost over time. Still have a minute to go. Kenny G said, Kenny G said, feeling some way if a bunch of people long the market on leverage, we are setting up Asia for a dump. Well, you're talking about like short-term trading stuff there. I don't have a super strong opinion on that. Yeah, just be careful. I mean, be careful. Liquidator is going to liquidate, so definitely keep that in mind. All right. If you had to pick 3 RWA to keep until 2030, what are your picks? You'll have to tune into my next video. No, I'll give you some RWA. I mean, Ondo is the number one, right? I think that they have they're not the best communicators in the world, Ondo, but I do think that they're the ones, right? They're kind of the ones that are going to be leading a lot of this. But I think that they have a twin that a lot of people don't realize, and that is Securitize, which has a SPAC, and that SPAC ticker, not financial advice to give this ticker, not saying to go buy it, is CEPT. Let me make sure I'm getting that right. But anyway, it's something like that. That's Securitize, right? And I'm keeping a very close eye on Securitize because I think it's a very similar. It has a very similar relationship with BlackRock that Ondo has. So it kind of makes sense that there would be a bit of it like a testing ground for. One second. If I'm BlackRock and I strongly believe in tokenization, but I don't know what the future is going to look like, it's very smart for me to have two options, right? Have Ondo, which does not have a stock or a SPAC or a equity side, a security side ticker, it's not going to the public equity markets to raise money to operate. It's right. That's what Ondo is. And then you have one that is doing that, right? That's what Securitize seems to be. Both probably competent tokenization teams that are putting assets onto a blockchain, right? But one has a public equity side; they're raising money from the public equity world, and the other one is just not. They have Ondo, and it's a governance token, right? So, and the ticker is CEPT, Charlie Echo Papa Tango, Cantor Equity Partners 2. Cantor Equity, very involved in crypto rolling out. And then the third RWA, I would just say, I mean, there's probably ones that I'm forgetting about, but I'm going to intentionally say Ethereum, right? The answer to a lot of crypto questions is more Ethereum than people realize. And that's because Wall Street that is moving in and making decisions going forward in crypto, Ethereum is just going to be the answer, right? And Solana too, right? But I just think that this is the time where if you're super spread out in crypto and you have a whole bunch of investments, trades are different, but if you have a whole bunch of investments in the long tail risk curve of crypto, you have to ask yourself, okay, until retail really comes back in heavy, like they did to cause the bull market in 2021, until retail comes back in heavy, it's going to be the institutions game, and they're consistently signaling that they're going to just pick the incumbents. They're going to pick the ones that are already winning, and that the market is telling them they're already winning because of the amount of dollars and yen and euros that have been exchanged for Ethereum. And we know this because of the market cap, right? Solana, Ethereum, there's some other chains as well. XRP, Cardano still has a heavy high market cap. Like those are going to be the coins that institutions are going to look at first. And I just don't see a world where they don't conclude Ethereum, right? At least being in that basket of the ones that they either choose to build on or go ahead and just start buying up. All right. So what do we see ETFs really leading on? Which are the ones that have really been pushed the hardest? Bitcoin, obviously, Ethereum, and then Solana and XRP, right? XRP, I think, actually has been taking the lead recently in net inflows, but Solana's not too far behind, and Ethereum is kind of that middle child. It's already been in the world. It's been in the equities world for a while. So, yeah, that's why I say, and you may not like to hear that, like, oh, Ethereum's not an RWA chain. It is. It is, because RWA does not, it doesn't mean that, it doesn't have to mean that Ethereum is specialized in RWA in the same way Ondo is. Ethereum can be RWA because the people that are coming into crypto and they're taking their lead from Larry Fink saying tokenization is the future. They're not going to come into crypto and say, oh, let me educate myself on everything there is to know about crypto RWA. No, they're going to say, what is the name I can trust? And do they do RWA? Right? Hopefully that makes sense to you all. And that's why I think Ethereum is a slept on RWA play. Warrior said, to be completely honest, I'd love to see a sunset date to Social Security because it has shown to be a failed program. I don't disagree with that. Warrior said, the way Ondo does unlocks is different than other projects. It won't affect price. Is Sui dead? No, I do not think Sui is dead. I think Sui is in its first cycle, and it is a hyper volatile asset. And I'm down quite a bit on it. Unfortunately, I bought a lot of it high, but I don't think that SUI is any kind of dead project zone. All right, folks, it looks like we're going to leave it there. You guys had some really, really good questions and stuff here. Yeah. Look, the price action for Ondo has not been great, but it's not, price is not the first data point that I'm looking at to indicate success and future success of tokenization operators, right? It's just not, because it's too early for the big boys to really take risk on this stuff yet. Okay. What would even be the mechanism for the big boys to go out and buy Ondo, right? It's not super clear how they would do that. Once there's an ETF, it's extremely clear how they would do that. So hopefully that makes sense to you all. All right. But one thing is, like, I wouldn't go further down the crypto risk curve into something that doesn't have an association with an institution, right? There's a couple other, like Plume is another good, great, actually, really good RWA play, but it's much further down the risk curve, right? So why would I trade Ondo or Securitize or even Ethereum for something further down the risk curve in the cycle where the institutions are not going to take the time to go down that curve if their needs are met in the top market cap names? Hopefully that makes sense. If you're a professor and you have if you're a contractor and you have if you're a general contractor and you have a team of electricians that you call on to go and do the electrical work in a house and build a house or whatever, and then you have a bunch of other electricians that are out there that do the exact same thing, but you don't know if they're good or not good. You're going to always go with the team that you know is good until they're not available, and then you have to go pick the other ones, right? So Ethereum and Solana, Ondo, Securitize, they are in the network already. The other ones, they probably have better technology, just to be honest with you, but they're not known entities. There's a barrier to there's a barrier to getting to understand why they are better. And that's just classic sales. That's just classic sales. Like, that's what a lot of salespeople do, is they're sitting there trying to educate the decision maker on why their product is up to par with Ethereum, why their product is up to par with the incumbent, right? With whatever the best in class is. And then every once in a while, a decision maker will say, okay, well, you're able to beat Ethereum on price. You're able to beat Ethereum on decentralization. Probably not going to be beating decentralization, but you're able to beat them on a couple of these benchmarks. I'll go with you. I'll take a risk, right? And then that's obviously a huge payout for the salesperson, but then that also brings that entity that got the yes from someone in the network, it brings that entity into the network, right? Ondo and Securitize are starting in the network. Plume, kind of in the network. I would say they are, because they were listed in that White House white paper on crypto. Okay, we've gone over time here. You guys have inspired some interesting thoughts here on RWA stuff. AIOZ, I'd be very careful with that one. I have not seen that one do what I would want it to do. Aerodrome, 2 thumbs up. I think that's a really good one because of its positioning in the Base network and its relationship to Coinbase. All right, adios.